Welcome back to part 2 of a report on Bitcoin mining energy and carbon footprint by CoinShares. If you missed part 1, we highly recommend you to check out that on the card above first. Let's do a quick recap. We started by introducing CoinShares' background and looking into the research methodology. We also briefly talk about the concern of Bitcoin mining thirsty energy, carbon emission, regional operation and energy sources. We will continue with the author's finding, analysis and conclusion of report. Grab yourself some popcorn, sit back and enjoy. Before that, do support us by subscribe, like, share and watch till the end of this video is much appreciate. Before we start, let's look at some related news headlines about Bitcoin energy-intensive mining and the carbon emission problem. Do Bitcoin mining really that bad? Compared to plastic, meat industry or even fast fashion? To ensure an impartial point of view, we will include both positive and negative reports. We will include all the links in the description below if you're interested in reading in full and doing your own research. Do remember to comment and let us know your opinion on this issue. According to the author's analysis, the carbon emissions associated with Bitcoin mining account for quotes, less than 0.08% or less than 1/1000 of the global total. To put things into context, this is only around 4x more than the carbon emitted to create fiat currencies, not yet consider storage, transport and renew. It's less than a third of the carbon emitted by the gold industry, almost less than a third of the carbon emitted by the global banking system and slightly less than the carbon emissions of dryers each year. Yeah, dryers, you know, the things you use to dry your clothes. Now, these comparisons are in stark contrast to the comparisons you see in clickbait headlines about crypto mining and the climate. The authors then break down the energy sources used by Bitcoin mining that generates this minuscule amount of carbon quote. Coal currently produces almost all emissions at 76%, with gas and oil in distant second and third place now emitting 21% and 3% respectively. What's crazy is that, quote, our calculations. This suggests that the migration of mining out of China temporarily increased the annual average carbon intensity of mining. This is somewhat contrary to the commonly held belief that Bitcoin mining got greener when all operations supposedly left China through December. Data suggests this is now the case. More importantly, the carbon intensity of Bitcoin mining has been declining over time, will be more significant due to the mobility of miners and their incentive to seek out the cheapest energy sources, which are almost always renewable. What ironic is the most significant chunk of Bitcoin's emission is coming from within the United States. This is more a consequence of the energy composition of the country than the actions of, say, that one crypto mining company that bought a coal plant. On the noted quote, as of December 2021, we estimate the relative contribution of coal, gas, hydro, nuclear and wind at 35%, 24%, 21%, 11% and 4%, respectively. The remaining 5% is a mixture of small amounts of oil, solar and other renewables, mainly geothermal. This means more than a third of Bitcoin's energy comes from renewable energy sources, which are impressive but probably not enough for Tesla to accept BTC as payment again yet. The fourth part of the Bitcoin mining report discusses the results as well as any factors to take into consideration. First quote, overall, our findings are broadly in line with recent comprehensive work on the topic, which verifies the general validity of the methodology. The author then speculates on the possibility of significant improvement in mining machine efficiency for a decade to come, which will further reduce energy consumption and also carbon emissions as mining operations will shift to renewable energy, mainly hydro. Quote, because electricity is not easily transported over long distances and the marginal cost is extremely low, hydropower in locations geographically separated from large centers of demand is often some of the cheapest electricity in the world. The authors, therefore, argue that Bitcoin mining could be bootstrap these kinds of renewable energy sources by increasing their profits in the absence of immediate demand. Next, the author points out that the best way to minimize emissions is for the Western governments to create a policy that attracts them to regions that use more renewable energy. This is because banning Bitcoin mining entirely would result in them go to the region using fossil fuels as primary energy. As why some miners are in those regions right now is because the governments there provide massive subsidies to fossil fuel companies, which makes dirty energy artificially cheaper than clean energy. Next is the feasibility of offsetting emissions through the purchase of carbon credits. For those unfamiliar, carbon credits are essentially certificates given to companies by government authorities when they do something green, such as adding a solar panel to their facilities. Oddly enough, carbon credits can be traded, and they're often purchased to avoid any emission sanction, since one credit gives its holder the right to emit 1 ton of carbon dioxide. Fun fact, Tesla makes most of its money from selling carbon credits. It's an interesting idea, to say the least. The author crunched the numbers and determined that the carbon output of Bitcoin mining could be offset at the cost of $200 per BTC. This works out to less than half the percentage of BTC mining revenue at an average price $42,000. Report conclusion quote, at 0.08% of global CO2 emission, removing the entire mining network from global demand and depriving hundreds millions of people for their only hope for a fair and accessible form of money would not amount more than a rounding error. However, quote, in order to provide its combined services of open peer-to-peer, objective, censorship-resistant and trust-minimized participation in global monetary network. Bitcoin strictly require a non-zero amount of input energy in perpetuity. The future magnitude of this requirement is unknown. Simply put it, the energy required to maintain the Bitcoin blockchain will continue to increase indefinitely till the last BTC is mined, the same with all industries. Final, Bitcoin emission are dwarfed by its benefits, and we couldn't agree more. People tend to forget Bitcoin is more than BTC. It is technically the most secure payment network on the planet. That's its most decentralized proof-of-work consensus mechanism. The perfect blockchain to build the future of the financial system on. Institutional investors value security more than anything else, and one of the only things standing in the way of them and BTC are their environmental concerns, which will hopefully be quelled as this groundbreaking report make the rounds. End with some fun facts. Malaysia's name appears in the report several times. Seems like we are playing a role in Bitcoin mining activities. Do read the report to find out more. So do you agree with CoinShares author research finding and conclusion? What is your take after we provide so much information? Does it help you make any conclusion on either side of the argument? Comment and let us know. Let's discuss, as we value your opinion as a community. We hope you have learned something in this episode, at least helping you understand better and enjoy this longer deep dive episode. Please support us, subscribe, like and sharing. Thanks again for watching till the end, and please take care. If you are also interested in investing in cryptocurrencies and owning a piece of the future of money, I have good news for you. All you need to do is download the Luno app. Luno is the first cryptocurrency exchange to get licensed and regulated in Malaysia by the Securities Commission, so you're safe to use it. Once you have downloaded it, go to the rewards section and type this unique reward code, NUB8XT. Once you do that, you can deposit and buy cryptocurrency. Purchase a minimum of 250 ringgit of any cryptocurrency, and you will receive a 25 ringgit reward of Bitcoin. Just make sure to key in the code before any deposit and purchase. I will leave a link also in the below description. Thanks for watching this video. Once again, a quick disclaimer that nothing in this video shall constitute financial advice. You are responsible for your own financial choices.